Well, good afternoon, everyone. There's still folks coming in, but we're 2 minutes after the hour, so we'll get started. Thank you so much for making time to be with us today. It's myself, Chandler Mount. I'm joined by my two colleagues, Chris Melchiori and Kevin Sansone, who will be presenting out today. In addition to some of these insights, we're happy to have one-on-one meetings to follow up and to do more directed Q&A. So for today's Q&A, please go ahead and use the Q&A function on Zoom or send us an email afterward. We won't be doing live Q&A just because of the number of people that are on the call today, but we will be able to reach out to you and connect directly. So today's presentation is trended data and insights on the luxury market recession, and we think recovery coming in response to COVID-19, but also more than that. So to get started, I'll explain a little bit about who YouGov is in case you're unfamiliar, and the Affluent Perspective study itself, where we get the data. We'll talk briefly at a high level of what's happening in the world of affluence and wealth today, how things are progressing forward from economic perspective, as well as a personal confidence perspective. We'll move into how that affects their future tense reality, which Kevin will talk to, and then Chris will bring us home with the return to market. So our expectations, the affluence expectations to returning to various categories of consumption. And we'll end on a trend that we've been watching for a number of years. It's really starting to take hold, and we'll discuss corporate social responsibility and how that plays a role in today's marketing. So YouGov, being a research and analytics group, connects data and insights from millions of consumers all over the world, and we do it in a daily basis. And we use this global platform as a way to help in the current situation. So with COVID-19 spreading rapidly around the world, we're using the resource that we have to give back, and we're putting all of our attention into a COVID-19 tracker that is being funneled to World Health Organizations, the medical community, to better understand and fight the spread of the virus, and really to make sure are people paying attention to what they're being told from a guidance perspective, and how can messaging be evolved to do a better job of getting people to comply with best practices. There'll be a link later where you can access that data that we have out in the world. But we use this panel again to reach global affluent consumers. Like I said, we have one of the largest research networks in the world, and it's been proven by third parties to be exceptionally good, and particularly the work that we do here in the Affluent Perspective team being both insightful and timely with the work that we're able to glean from our panel. Now, YouGov offers quite a bit of products from this connected data set. Kevin, Chris, and I sit on the custom research side of things. So we are specialists and category experts in advanced reporting, and that's where the Affluent Perspective sits, and that is the data set from which we are covering this presentation today. The study is continually evolving, but what we do as a benchmark doesn't really change. We're looking at lifestyle-focused insights. How do they spend their time? What do they really care about? What do they think about luxury and purchasing and media? We look at that across a number of categories, more than 9, but these are the major ones that we've investigated in the past year. And we use it not only to understand category and consumer, but some of these bigger, broader trends: CSR, personal branding, what's happening in the quality conversation, in the human touch conversation, where are there untapped markets to reach, and what is the future of luxury? So we are positioned not only to understand the broad trend of the world, but also the specifics of who's driving it and how does that impact a particular category. And so we're able to dig into specific topics, demonstrating brand value over competitors, target development, so who is the right target and how do we get to know them better, and high-level strategic thinking, whether it's informing regional managers on customer expectations or working with specific hotel properties to elevate an executive club offering. These are examples of work we've done recently. So all that is built off of this year's study: 23 countries, nearly 9,500 affluent consumer interviews. And when we say affluent, we're generally speaking about the top 10%. So in US terms, that's a minimum household income of $200,000, but we go up from there. And we're actually looking at more of like a $500,000 consumer on average with a little over $4.5 million in assets. So it is quite an affluent person. It is the person often who's staying in suites and buying the fully trimmed vehicles. So we're understanding really the top of the category and working our way down. The data that we're presenting comes from that 9,500 person sample, but also 4 recontacts that we've conducted between March and May, primarily in the United States, but also with data focused on Europe. We went back to that 9,500 person sample and asked them to take follow-up surveys. So with all that out of the way, the key trends that we've been watching coming into today's 2020 Affluent Perspective study there's really 3 most important ones. The first being this mass up trend. The percentage that agree that many mass brands are now able to offer a level of quality that's comparable to luxury brands has been growing. It's at 70% of affluent consumers today say luxury is not defined only by its quality. There are other factors that really set it apart because mass brands are now able to mimic quality. And at the same time, consumers are stepping into making fewer purchases that are more meaningful in nature. So it's a branded experience that speaks to who they are on a deeper, more personal level. And going right along with that is this search for humanity. The percent that agree that brands are losing their human touch has steadily increased by more than 10% in each of the last 3 years. And as we see people not withdrawing from brands, because we think that the affluent and the luxury consumer of today still is very much interested in having a branded experience and not stepping away from that at all, but they are looking for those brands to deliver on a deeper, more meaningful level. And this is the point where we left off last year that is really evolving in today's data, and we'll see that later today. If we step way back to 2015, we can have the perspective that the number 1 and number 2, but really the most important issue here is unquantified risk. So when we ask affluent consumers a variety of topics on what are you very concerned about or extremely concerned about, the answers were things that I can't really control and things that I can't put my finger on, followed closely by social justice issues like climate change and income inequality. These are 2 items that are both exacerbated by the coronavirus effect right now. They didn't know a pandemic was coming, and yet here it is. They don't know when it's going to end, and yet they have to deal with it. And at the same time, so many people are being hurt by it. These are 2 top fears that they have, and they're followed right there by the economy. That things are really squarely hitting the cylinders on things that were really quite important way back when. So where we are today, concern over the virus in the United States has certainly peaked, and as of May 4th, had been in a bit of a pullback, so down from 78% at the peak to 66% among our affluent US consumers. And as we see from a global perspective, there was a pretty strong range looking at April 16th to 20th when we conducted that research. Areas like Spain at 77% are expected to remain quite high. Same with Italy. Even if concern for the virus scales back, we'll see in other data that the troubles are not done in Southern Europe. There is a little bit more optimism and comfort levels in Germany and France, where things are a little bit better, but still it's not zero anywhere. People are generally quite concerned. Now in the US, the economic confidence is taking a significant step back. So where we were looking at the start of this trend line from 2019 through early 2020, it was kind of at the level that it's usually at, right? That high 50s, low 60s level of extremely very confident in their personal economy, their ability to pay their own bills and move through the world. Same with the US economy. It's sort of historically, that's where it's been post-recession. So it doesn't really get too much higher than that. And as we see in the gray, coronavirus starts to do its thing across the United States and Europe, and in the US, you see a significant pullback as concern for the virus spread increases, personal economy confidence decreases. And what's important about that number is that personal economy confidence is tied to willingness to make luxury purchases, discretionary purchases. So if you don't feel like you can make your mortgage payments, you're probably not going to book a vacation. The logic behind that. And following along those same lines, as the US economy is headed to recession, the majority believe that is the case and it's happening. And what we've been seeing in other data here is that this has no gender skew. It does skew to younger consumers. So the fear or the concern around a recession is quite high. But in other data, women in particular are seen as, are seeing COVID-19 as something to be more concerned about and resulting in lower confidence. So there is a gender skew in the overall situation about what's happening, but not on something as broad as recession. The only country that really seems to be not so concerned is China at 44%, believing that there won't be a true recession. And I think economists predict still a growing market through 2020, albeit small. So how are they managing through a time when there's high concern over a pandemic and high concern over a recession? And what they're doing is they're actually being really savvy, and they're focused on their finances first. 59% have plans to buy or sell financial investments. And when you peel that apart, no one, practically speaking, is exiting the market only. 52% are buying and 43% are dealing, buying and selling. And when you look at what they're doing, they're getting into or dealing around domestic stocks primarily. So they're moving out of stuff that didn't really make sense to be in maybe long term. They're repositioned for future growth. And you can see some of the hedges like gold and cash and even municipal bonds. The sellers are only a quarter to a third are moving to these more safe havens of investments. The majority of people are still moving into those equities and more risky positions. So they're not afraid of the long term. And what's really interesting is that they've been doing this on their own. So 59% are in the market to do it. 31% have already gone ahead and made a trade, bought or sold investments directly in response to the outbreak. And 79% of those investors did so without speaking to a financial professional. So the majority of people, even very, very wealthy people, are doing it on their own. And when we look on the flip side in terms of, are you working with a new person or are you trying to add new accounts to your life, only 9% have done so. So in terms of making large moves, no, they're not moving, but no, they're also not talking to the people that they've been working with primarily. They're working through their own knowledge. And despite the lowered confidence, their personal economies are really built to endure. 28% average savings rate, and that's very consistent since the first recession in 07, 08. 81%, my family's never been more economically healthy than we are right now, and I'm in good shape to endure a recession. 90% in the United States, really well prepared. And we see that it's been a decade of preparation. Looking at financial data from the Federal Reserve, net worth has grown by 66% since just at the start of the Great Recession to just before the start of the COVID-19 outbreaks. Really quite substantial growth, and a lot of that, the majority of that, coming in financial assets, namely cash on hand, deposits, and financial markets, stocks, funds, and public debt. Corporate debt. That's grown by more than 100%. And while this financial wealth has been growing really rapidly, liabilities have not. It's up just 2 trillion relative to the 47 trillion in total wealth creation. So what does this mean? Consumers are ready for the long haul. The affluent consumer has cash at record highs and their debt is well under control. What they're doing is mitigating their financial risk. They're moving out of investments that don't make sense anymore, and they're focused on realignment and not run and hide. And then lastly, the biggest hurdle, the thing that we can plan against, the projections that we can make, come off that personal economy number. If uncertainty is the major hurdle, then it's okay to discuss how your brand is doing. If it's doing well, if it's in a position to say, hey, look, we're prepared for this. We've got the financial backing to withstand this moment, and we have a brand that's lasted a long time that is prepared to support its people and its customers, and we've done it before. that kind of messaging is a great antidote to the uncertainty people are feeling, the thing that holds people back from making purchases. So I'll turn it over now to Kevin, and just please let me know when to advance the slide.
Sure thing. Thanks, Chandler. As Chandler just closed out, we saw that word uncertainty, which has really come to define the consumer market in terms of the COVID-19 pandemic. And what I'm going to do here is I'm going to talk through just a little storyline that we have called the future tense reality, which really gets at how people are feeling about their confidence in life and what's coming next. And we're going to show you some really interesting things here. Chandler, next slide, please. I want to take it back though to 2011 when we were at the tail end of the previous Great Recession. Our study introduced a trend back then called the present tense reality. And what that meant was that people at the end of the Great Recession had shifted their mindset, and they weren't necessarily looking towards the future as much. They were really focused on the present. They were moving from faith to the future to viewing things one day at a time. Their long-range plans kind of took a pause, and they were really focused on protecting themselves, their family, and maintaining their happiness. And Chandler showed you that data that showed that they really built up their shores of wealth, their assets, and their available cash, and that was all done and is still being done to protect themselves in these times. So you can see on the right here, we asked how confident, this is in 2011, how confident are you in what your future will be like in 6 months, 82%. 1 year, 75%, and so on, going down. So there's really strong confidence in the short term and a real lack of confidence in the long term. Next slide, Chandler. But today, it's the exact opposite. The immediate future is less clear. How confident are you in the future? This was back about 3 weeks ago. This year, 26% confidence in this year, 36% confidence 1 year from now, 45 to 48. So you can see, because no one really knows what it's going to be like in the next few months. We don't know, will the pandemic subside? Will there be another wave? What's happening with travel? What's happening with shopping? As we reopen stores, things seem like they're getting back to normal, but people really don't know what's going to happen. And that is showing up here in this data, that there really is a lack of confidence in this year. But you know what? 3 years from now, I think things are going to be better and my confidence is higher. Next slide. And because of this uncertainty, people have really shifted to focus on their emotional wellness over their physical wellness. In previous in waves of our study, we've shown that physical wellness is always the top priority for people, and for many it still is. But the reality is right now, mental health is just at the forefront. When we ask people how their habits have changed as a result of the pandemic, the percent doing more versus the percent doing less. Number one item, connecting with friends, family over the phone or other device. We can't get together with people, but we can stay connected through the Zoom technology, through FaceTime on our iPhones or whatever. 55-point difference between more and less. Next, decluttering your home. We've talked in webinars past about the idea that people are simplifying their lives, and there's no better time to do it when you're stuck at home and looking at all the things in your house and all the clutter, and so people are really taking that to heart. 51% saying they're doing more, decluttering your home, compared to only 2% saying doing less. Just going through the list a little here, spending time on hobby or craft, a 21-point difference. Drinking alcohol, only 6-point difference. A lot of people are drinking more, a lot of people are drinking less. One key item though, spending time outdoors, you can see is a negative difference. In certain countries, the lockdowns were much more strict than here in the US. You couldn't even go outside. We saw a few weeks ago in Spain that children weren't allowed out of the house for 6 weeks. And just recently they were allowed to go back outside again. So now if we looked at these numbers, and again in a few months, it would be much different. People are spending more time outdoors. But that exercising and spending time outside, often associated with physical wellness, but also with emotional wellness, those two items really didn't see the doing more change that others did. Before we move to the next page, though, I want to focus 1 second on shopping online. We did see a shift, obviously, in people shopping online more as less people wanted to go out to stores or could go out to stores, especially true in China. 66-point difference between those doing more and those doing less. Next slide, Chandler. And continuing with that idea, I mean, online shopping is primed to keep growing, but it's not immune to uncertainty. We have 49% of our affluent saying that they plan on continuing to shop more online even after the pandemic ends. A lot of people were doing it already to begin with. More people were doing it because they were stuck at home and thought it was safer. About half say they're going to continue to do it more after things die down. But in the U.S., online shopping isn't, as I said, immune to uncertainty. There are things that people are concerned about when thinking about online shopping. Number one, of course, the lack of availability for items. We all know the things that we can't find: toilet paper, other paper products, meat shortages, and so on and so on. The other thing, people are very concerned about price gouging by online retailers. And again, going back to the paper products, you see this on Amazon or other sites where maybe you're paying a low amount, but they're charging $20 in shipping or whatever. So this is a concern even for the affluent population. Extended delivery times, contaminated packaging, and just from a more practical sense, ability to test things in store. The people really are concerned about the fact that they can't go to a store and see something and touch something and feel something. So that hasn't been noticed by this group. Chandler? But the overall thing here is that we've seen that confidence has sort of flip-flopped from 2011 in the Great Recession. Most people have said that their life has changed in one way or another. 19% say it's forever changed. 19% say it's no lasting effect. But 62% of our global affluent do believe that they're going to make some changes, but mostly live the same way. So to the amount of people that actually think that everything is going to go back to normal and I'm going to live my life the way I did is relatively small. Some people think, or a majority of people think, that my life is different. And those things, we asked them in our last wave, an open-ended question, how will your life be different? We had people say, hygiene reasons. I'm going to wash my hands more. I'm going to wear masks. I'm not going to handshake people. Just general caution about travel. I'm going to travel less for now. I don't want to be around people in large crowds. No more concerts. No more, Broadway shows. Just continue my social distancing. And then, of course, there's also the socioeconomic and political aspect of this, where people have become greater awareness of income disparity and age differences as we see the people that are most affected by this virus. And then, of course, the economic turbulence, the recession, what's going on. And of course, there are some people that look at this as a form of government control, that all these things put in place are aspects that the government are using to control us even further. And we did, of course, have some people that had, that positive aspect, that I'm going to live my life more. I'm going to do this more than I did before. I can't live in fear. I need to enjoy my life as best I can. Chandler? So what does this mean? It means our ability to plan has been compromised. There's more clarity further down the road. Things are going to stay unclear for a little while longer. Eventually, things will become clearer. You'll need to adapt to change. This recovery won't be one size fits all. Individual needs will take precedence. Everyone is feeling something different about how they want to handle things. We have people that want to wear face masks. We have people that don't. We have businesses that have wanted to reopen regardless of what's going on, and some that don't. It's going to continue like that for a little while longer. So we just need to be ready to adapt to change and be very wary of individual needs of people, even if that need is totally different from person B. And then, of course, emotional wellness has moved to the forefront. You need to position yourself to help consumers with their shifting habits and behaviors. The things they've put off this year, the things that, all those people that wanted to travel and see more of the world, you can't do that right now. The people that wanted to connect more with their family in person and have those get-togethers, those dinner parties, you can't do that right now. So you need to do what you can to help consumers with these shifting behaviors. Chandler?
Thanks, Kevin. So I'm going to take you through what we're seeing in the market. We all know that it's a difficult time out there for everybody, including the luxury market. And what we're really trying to get insight here into as economies open up is whether or not consumers will, and when, well, we know they will, but when they're actually going to return to the market. We can open up stores, we can, fly airplanes, but we're not necessarily going to get them in the seats or in the stores. So hopefully this will shed a little light on that subject. Next. So to begin, we asked when they think the pandemic will subside in the US. This is among US affluent. And the interesting thing is it's fairly mixed. So there's 28% who think it's going to stop in Q2. There's an additional 26% in Q3. But the really interesting point, as we started the first Recontact off of our main wave back in mid-March, and since then that number that has gone to October or later has skyrocketed from 19% to 46% in the recent wave. Next. And if we couple that with the fact that these affluent consumers, many of them who are either very or somewhat likely, 85%, think there's going to be a round two of this. And what this means is that there is a shrinking window that could be potentially happening here as the pandemic wears on in the market. When we look at it globally, China is the most optimistic, not with 38% not thinking there's going to be, or not very likely, or not at all likely. However, there is still 62% of the Chinese who think there is going to be a second wave, and this just is magnified by people in Europe and especially North America, where 88% think there is going to be another wave. And in wave 4, the most recent wave, that went up to 59% in the US who said very likely, which is a very significant number. Next. So what will it really take for affluent consumers to be confident in coming back? Simply put, it's really an effective plan for combating the pandemic. When you look at this, it's really the effectiveness of a treatment, a vaccine, decline in the actual number of new cases, and to a little smaller extent, availability of an immunity test. So really what we're looking at here, it has nothing to do with government interaction. It's not anything to do with what is in the marketplace right now. In fact, when you look at the one in the middle, the reopening of schools, restaurants, and other local businesses, the optimism was there. 72% of people in that first wave thought that this would be a great indicator of when the pandemic would end, or when they would be able to resume their normal life activities. But in the most recent wave, that has been cut essentially in half, down to 37%. Next. And while all this is happening, the affluent are becoming more and more restlessness. Their restlessness is building. From the first wave in mid-March, 65% agreed to the statement, the more I stay at home, the more I want to get out and do something. And that has risen 7 points to 72% in this past wave. When you look at it globally, this is really true among some of the harder hit markets, China, Spain, in which 8 in 10 or above agree to this sentiment. But it is generally high globally, with the bottom at the UK still at 62%. Next. So to get a general sense of consumer expectation of category engagement, we asked in which month they will engage in certain activities. And this ranges from connecting in person, which we know, family and friends are very important to the affluent consumer, to taking international vacations. And this was all relative based to when they thought the pandemic will subside in their country. This is global data. And in the short term, it's really the financial sector, really because of its ability to engage remotely, is where the affluent consumer is very active. As Chandler said earlier, that the interaction with the financial markets is very well. They think it's a great time to participate, especially buy stocks. And that's mostly among older individuals, Gen X plus, and those in North America. The other point I will make on this is also the donations to charities, in which that is still strong. However, we do feel that the top two categories, the health and the social services, are seeing the most benefit to this, given the circumstances that the pandemic has given way to. Next. Next on the list is personal luxury goods and real estate. So starting with personal luxury goods, engagement, we have seen some of it, especially online currently, but we expect to have a greater interaction, come Q3 and Q4, especially once retailers open up and people feel that they're safe to go out. With the restlessness, I feel like this is going to be a faster recovery for in stores. When we look at the real estate market, it's really a mixed message here. There seems to be going to be a lot greater supply. People are ready to sell their personal residences far more than they are going to be purchasing them. The other thing I will also mention is that the decrease in people in the market for purchasing a personal residence has declined from the main wave. That's pre-COVID. So there could be less of a demand even when things start to get ramped up in Q3 or Q4. Next. And finally, there's a very slow return to both the travel and automotive industries. Some consumers anticipate a Q3 engagement, but engagement is most likely not to come back until October or later. And one thing I do want to stress is we phrased it as October or later. We're not sure and if it's really end of this year, but it could also be further out into 2021. So we need to keep an eye on that. So while engagement levels for luxury autos is fairly consistent with pre-pandemic levels, those for travel are down. Last year, 87% of affluent consumers took a domestic leisure trip compared to 76% who say they're engaged now. And looking at the international or long haul trips, 64% took an international trip compared to 57% who will engage now. It's not necessarily a completely apples to apples comparison, but it does give you a sense of how the travel category is experiencing a huge drop in engagement and a delay as shown by these slides. So next slide. To tie in and just focus on travel for a slide, since this is one of the most hardest hit categories, the restlessness building up is also apparent in the travel industry. 67% now say they can't wait to go on vacation. And this across the board globally, with the lowest surprisingly in China, but especially in Spain and Italy, the hardest hit markets. Next. And the one caution that we will look at, and we could see it in the earlier slides, is the travel industry has to understand that when it comes down to it, a lot of the interest, and it's really a matter of safety and risk, we expect to see really domestic travel being the one that comes back first, with international travel coming a long way down the road. As you can see by these bars, really people are expecting in Q3 to come back domestically, while really we're talking 60% or 70% across the globe, in which international travel is more likely in Q4 or 2021. Next. So what does this mean? There's a desire for action. It's building. The problem is, as we see from the data, behaviors may lag. So brands need to start building, and hopefully you guys are doing this now, a foundation and maintaining the conversation so that they're top of mind, or you're top of mind when the consumer's ready to act. Outlook for normality extends. When consumers will be back in the market's uncertain, because of both the expectation of when the pandemic will end and the possibility of future waves of the pandemic coming back. And finally, when we look at the market, there are relative indicators, and depending on what sector you're in, you can anticipate based off of other sectors. But the one big thing to take into account is just the need for a medical response and a plan going forward. That will be the biggest indicator on when confidence among the consumer will come back. Next. So before we get into the last section, we just want to go through and revisit certain trends that happened before the pandemic and how the pandemic might affect it going forward. The first, so looking back in about 2002, Luxury was more about conspicuous consumption, in which the brand itself was more of like a badge and displayed who the individual was in terms of just experiencing and displaying their wealth. It was all about indulgence. And then when the recession hit in 2007, we saw a movement to a more resourceful frame of mind in which people were looking for deals and took pride in the deals that they found. From there, as the recession wound down, we saw a different dynamic called the worth dynamic, in which it was really about a search for three pillars of quality, craftsmanship, and service, in which this was what people were looking for in their luxury products and defined who they were going to. That's not to say that the deal dynamic gone away. It was more of a dichotomous frame in which many people went the worth way and others stayed in the deal dynamic. And recently, in around 2017, we saw this evolved into people looking for services and products that had a personal meaning, a personal relevance for them. This was more internally focused, which leads us more now to an outward look of what consumers want to see their brands doing, the action that they're taking, the brands that what the personal values of the consumer is in the brands that they buy. They want to see the brands do what's right. And that leads us into next. Social responsibility.
Thank you, Chris. So there's a few big trends going on now. So there's this incredibly secure person who's built up that wealth internally. They can't see their short-term future, but the long-term future still has some strength. They see online luxury shopping coming back before in store, but that's still coming back. Luxury autos interest is there. In fact, it hasn't really varied too much from where we saw at the end of last year. They're just waiting for their moment, and travel starting close to home and over time expected to ripple out to broader and broader areas. And as Chris just walked us through, consumers who've gotten to the point where they're saying, I want brands that are not only great, not only speak to me at a personal level, but are actually doing something that I can point to and say, hey, this is an important step that you've taken, and I support that. And we see that here, if I can advance to the next page. Action today yields positive brand association. So on a global basis, 75% of affluent consumers agree. And really look at China and Spain, 85% plus agreeing that I think more favorably about brands that play an active role in responding to the pandemic. It is not the wrong time to make a stand or to put your flag in the ground and say, hey, this is what I stand for, and this is how I'm going to take care of the world around me. And this is actually something that is really quite expected. 59% of consumers globally, affluent consumers, agree that, I believe it's true, that luxury brands should be held to a higher standard of higher standard than non-luxury brands on social responsibility. And the more engaged a consumer is in their luxury continuum, if they're very highly engaged, it goes up to 73%. And even someone who's really not all that engaged in luxury consumption, still 53% believe it's true. So luxury brands are being held to this standard, whether or not the brands live up to it, and they're being judged favorably in the present moment. So it's a good time to have that positive message out there. And so the question is, what do people want to learn about brands? So this was asked not only in the main wave of our tracking study, our annual study, but also in the COVID-19 Recontacts globally and in the US. And so when we say, what is it that you want to learn more about? Well, there's a dead heat at the beginning of the year between what you're doing for environmental sustainability and how you're treating your employees. Well, come COVID-19, there's a big boost in how you're treating your employees and relatively no difference in what you're doing on your sustainability activities. We had to add the actions a brand is taking to deal with coronavirus, and you can see that's got a very strong response at 42%, and really no change to what you're doing in your community and what philanthropic activities you're engaged with now. So the one real mover, and we can see the U.S. trend on the right side of the screen, and it really rocketed up quickly, is how are you taking care of your employees? And we can see also sustainability doesn't really move around all that much throughout the course. Same with having an impact on your community and philanthropy. Those are pretty stable. We do see the actions that a brand is taking to deal with the outbreak is pulling back somewhat in the US. What this means is that there's an opportunity to connect with an authentic response. And so the question we put out to global affluent consumers is, how good of a job are brands doing communicating their sustainability efforts? And the answer was not that great. Only 20% said that it was excellent or very good. Most say it's a fair job. Really 35 to 40%, depending on your region, are saying it's a good job or a fair job. There's a lot of room to improve in the authenticity and just really the fact that you're communicating clearly about what you do in terms of CSR. It doesn't come easily. 69% of consumers say that they find it hard to trust a brand claim about their sustainability practices. So it needs to be genuine, and it needs to be provable really from the outside. Can someone look and understand from the top down, from a corporate level down, hey, these guys they're trying really hard. They're working in the community. They're taking all the right steps. I can really believe what they're saying. That's an important step to not skip and to do right, because most people are pretty skeptical. So what it means is that luxury consumers have very high expectations for luxury brands to act responsibly. It holds true during a crisis and outside of a crisis. So before the crisis, it was also true. But in the midst of a pandemic, all consumers have a very selfless approach to what they would like to see brands doing. They want to see them focusing on taking care of their employees and also contributing to the cause in the ways that are, that make sense, using the resources that those brands have available to them. Number two, labor practices and sustainability are really the core of social responsibility. So it's those two items in particular that we think in a post-COVID world will remain in the forefront. And lastly, like I just mentioned, there's an opportunity to do a better job communicating this. Consumers not only expect brands to act responsibly, but they express an interest in learning about those efforts. They want to know. They want to be able to find it. And just a couple of short months ago, they were feeling as though brands are doing a good enough job of communicating their efforts. And that said, the way the messaging is delivered matters. So for brands seeking to connect with consumers through sustainability or any other area of social responsibility, it's important to do it in a way that's transparent and believable. And so that's the Affluent Perspective. That's our 2020 trends and COVID-19 updates. We use this data set connected to a vast global data set for a number of different insight opportunities, whether it's a topical report on our current data, custom reports that expand on our current data set, and truly bespoke studies that leverage our capability to go out and find new people to take surveys. As I said at the beginning of the call, YouGov is committed to making our data available publicly. We have a 27 country, 400,000 survey tracker among the general population that is out there for free. It's available for public consumption. The link is there. You'll receive it when you receive a copy of the slides after today's webinar. Should you have questions, if you haven't sent them to us through the Q&A function, we'll respond to you one-to-one. If you would like to ask a question or speak with a solutions consultant, please feel free to email me and I'll get that scheduled for you, chandlermount@yougov.com. If you're in Europe, my colleague Sylvia Bladotova at yougov.com, she can help you there. But on behalf of Kevin, Chris, and myself, thank you very much for joining us, and we look forward to hearing from you soon.